Here is a true dilemma. The dilemma is that we have to buy different asset classes, but we can't really be experts in all of those different asset classes. We want to be diversified, right? We want to own some crypto, we want to own some stocks, we want to own maybe property, maybe precious metals, but we can't be experts in all of this. Now, the reason why we want to own all of this is obviously risk diversification, reducing our portfolio volatility, right? We don't want that our entire wealth crashes by 80% just because we are too heavily in Bitcoin and just because Bitcoin moves that way, right? Where we own different asset classes, then the prices tend to not be that much correlated to one another. And so if you also have some property, if you also have some stock and maybe some gold, then a Bitcoin crash doesn't affect us that much because we might only be, say, 20% in Bitcoin relative to our overall wealth. So that's the idea of diversification. We want to own everything. But the problem is we can't be experts in everything, right? We can't be stock experts and we can't outperform the property market at the same time know the supply and demand and the gold mine development, etc. We can't follow all the markets at once. But at the same time, we should be invested in everything, right, in order to get the best risk-adjusted return. So what's the best approach here? I personally believe that there is different segments of those markets and that there's different strategies on how to invest in those markets. So for example, with the stock market, right, you could simply just buy an S&P 500 ETF, a low-cost S&P 500 ETF, maybe from Vanguard, and you could simply just ride the overall market. Or alternatively, you could try to speculate in small caps, right, in those penny stocks, and try to beat the market, try to find a gem within the stock market and potentially outperform. So there's very different ways to participate in the stock market. It's the same for the crypto market, right? You can simply just buy Bitcoin, maybe sometimes ride those waves, maybe just rebalance your portfolio, or you could start trading in small meme coins that are potentially not even listed on centralized exchanges yet. It's a very different way to approach those markets. Now, I personally believe that it makes most sense to pick a single market that you try to outperform. And that for the other markets, it makes most sense to not even attempt to outperform, but to just attempt to get the general market exposure. So you want to be outperforming in one market because then you can focus on that one market. Because in order to become a winner in a market, you have to be among at least the top 10%, right? If you're just, let's say, in the top 60%, you might still underperform because, again, the winner takes most. That's true for, let's say, the assets within a market, right? Most assets underperform. When you just buy, say, random stocks in an index, you're very likely going to underperform the index itself because the gains are concentrated in just a few stocks. It's the same for, let's say, you pick a fund. It's the same for, let's say, you start actively trading. The majority of traders, the majority of funds, the majority of assets underperform the average simply because the gains are so concentrated. In other words, if you try to attempt to outperform in a market, you need to have a real shot at being, say, in the top 10% of the best informed people, of the best traders, of the people that have the best data. And you can't do this for all of the markets. If you try to attempt this for all markets that you want to be invested in, then the likelihood that you're not in those top 10% is very, very high. And then in the end, you will underperform all of those markets and you don't get anywhere. So you have to pick your niche. Now, what's the best niche to pick? It's probably the one where you're currently most passionate in, or probably the one where you want to develop your passion in, right? If currently, most of the days, you check out the property market and you know exactly how different areas in your town are developing and you know exactly what kind of upcoming projects there are and you know all these intricate details, then maybe that should be the one single market you want to be focusing on. Maybe then you shouldn't even try to outperform Bitcoin. If you're very heavily into cars, maybe there's even a way to make money in that, right? Of course, the vast majority of cars depreciate, but there is a selection where some cars outperform sometimes. It's the same with the altcoins, right? Most altcoins underperform Bitcoin, but sometimes some altcoins outperform if you know how to look at this right. And so this is how in general you want to write this, at least in my opinion. You want to still take advantage of the diversification effect. You still want to take advantage of having lowly correlated assets to one another. You don't want to drop in 70, 80% in your wealth just because Bitcoin drops. But you don't want to necessarily try to outperform property or try to outperform the stock market if your focus, for example, is crypto. This is probably the most likely thing because this is a crypto-focused channel. So I personally took crypto as my main thing trying to outperform. When I bought a flat in Hong Kong, right, I've also got property exposure, I have a flat in Hong Kong. I didn't try to pick the very best flat. I simply just tried to pick something that's relatively liquid, that has a lot of comparables in a very big building, where you see still a lot of transactions happening, where you know when you're buying, you're probably not going to buy vastly above or below market. You're simply just riding with the market. And if you want to reduce exposure, if you want to sell this at some point, you can, again, for a relatively transparent price. So this is how you can approach property, right? If you are more risk on with property, you could buy a house that's a fixer-upper somewhere that might be under market value, that might have been abandoned for a while, where you might have to check what kind of repairs have to be done. You have to estimate the cost of those repairs. You have to organize those repairs, right? This is outperforming the property market. But then probably when you do all of those things, you can't also outperform crypto or you can't also outperform stocks. So there is a method to all of this, right? And in the end, the people that outperform a certain market might even use that market to develop their career in, right? If you, say, are very deep into tech, then you can either use this for trading tech stocks or you can use this to analyze the blockchain, right? You can go into the technical details of blockchain analysis. But if you're very deep into tech, probably you don't want to become a dealer in art, right? Probably you don't want to figure out what's the next small Picasso painting or small little drawing by Picasso that you can potentially flip, right? You need to have a different mindset for those kinds of markets. So the top 10% are not there by chance, right? They're there by learning a lot, by upping their skills, by spending a lot of time in that market, and by being well connected in that market as well, right? By knowing other people that are also part of the top 10%. There's all kinds of levers, but it doesn't happen by chance, and it doesn't happen if you spread your focus too thin. So you do want to spread your assets, you don't want to spread your focus, and simply try to generate the alpha in the market you're most confident in, potentially also be over-allocated, relatively speaking, right? If you know a ton about crypto, then it might make sense for you to have 30, 40, 50% of your wealth in crypto. Same if you know a lot about property, it might make sense to have a majority of your wealth in property. But if you don't know much, then you simply just try to ride the market. You buy the index ETF for a stock market, you buy a typical flat, and you're just riding out all kinds of waves, and don't even try to buy lower than the average and sell higher than the average, because this is very likely going to go against you. You might say you buy a very cheap flat, right? And you don't really know much about the property market in general. There's probably then a reason why that flat is so cheap, right? And you might not know it. You might not know the underlying reason for this because you're simply not informed enough. You don't know that you have to look for the electrical wiring or for the plumbing or for the crack in the foundation or whatever it is. It simply appears to be cheap to you, but just because you aren't skilled enough to determine a real fair value. So don't try to even buy low in the markets you have no idea about. Simply just buy the average and ride the waves, and be only very precise about trying to beat everybody else in the market where you actually have a realistic chance of beating the market. So don't feel overwhelmed by knowing all of those different asset classes. You don't have to, right? You just need to go with the flow, make sure you are diversified. Don't be that lazy either that you just say, I'm not focusing on this one market and thus I don't even open up my brokerage account and I don't even buy any stock ETFs, right? Don't be that lazy either. But have your mental focus on one thing try to become the top 10%. And when you get there, then use those proceeds, use that alpha to then also allocate this to the other markets and to, again, have a somewhat well-diversified portfolio that makes more sense for your risk tolerance, for your knowledge in the different markets, etc. If you found it interesting, feel free to give this a like. It will help the channel grow, and feel free to subscribe as well. I publish videos regularly. See you next time. Cheers.